Moving on now over to the markets. This week we were joined by Darin Newsom of Darin Newsom Analysis. Several viewers submitted their questions that we were able to ask Darin, but we began that discussion on Wednesday afternoon by catching up on the latest activity that was impacting the grain markets. Well, there's always a number of factors we'll jump into to discuss why the markets are trading the way they are. But before we do that, just let's get your general take on these markets as of late.
It's something that, we've been talking about. There's one word to describe things, and it's just strong. We're looking at a bunch of strong markets here. It doesn't matter if we're talking about the U.S. dollar, if we're talking about basis, if we're talking about wheat, if we're talking about any of these markets. As we start this meteorological fall season, the key word, the word of the day, the word of the season is simply just strong.
As you use that word strong, Darin, I'm sure the viewer at home is going to be wanting me to ask you, how long do you see that strong outlook lasting, particularly as it relates to the grain complex?
Corn and soybeans, if we look out at the future spreads, and particularly if we want to take the whole of the market in, look at the Dees July future spread and the Nove July future spread in soybeans, they're both showing very little carry. And so what this tells us is that the commercial side of the market's concerned about supplies to meet demand over the next marketing year. We finished the 2021-22 marketing year in a very tight situation. We know this from the cash markets. We know this from basis. And now as we go ahead into 2022-23, the situation hasn't changed all that much. The weather was still a problem. Not just here in the United States, but also China and possibly in Brazil as it moves through spring and summer. So, weather is still the issue. Supplies are still tight. Demand remains strong. So I look forward to at least last, for most of the 2022-23 marketing year. I'm just not seeing any signs of change.
Darin, you mentioned there's not much carry in the market. I want to jump to a viewer question we had submitted this week. Justin wrote in and was curious your thoughts. He noted that he has on-farm storage, but was curious when he starts harvesting here, his typical strategy is to fill those grain bins, then start hauling to town. He wants to know if it'd be advantageous of him to maybe haul some of that early to town, take advantage of that basis that's pretty strong out there right now, particularly here in Nebraska. Your thoughts, Darin?
Yeah, this is a great example of the gambler's dilemma, and what I mean by that's the classic song. You got to know when to hold them, know when to fold them. And this is going to be a difficult year because there is no carry in the market. The market's not paying you to store; it's paying you up front. Basis should stay strong as well. So I would. If I have more than what I'm expecting to put in a bin, I'm probably just going to sell it right off the combine. I don't want to hold it that long. If I can hedge it at some point and wait for basis to appreciate into my position, that would work as well. But just point blank, if I've got some grain that I need to move, I'm going to sell it as quickly as possible. It's what the market's telling me to do. Newsom's market rule number 2: let the market dictate our actions. No carry, might as well sell.
Darin, I understand you recently made a trip across Nebraska. You saw some fields being harvested. What have you heard in terms of yield, if anything, from producers? Some early checks, at least here in the western side of the Corn Belt.
That they're disappointing, but we knew that because it hasn't rained in what seems like forever. I haven't heard any actual yield numbers, just that, with the folks that call in saying, they weren't good. They weren't expected to be good. And the local basis market was telling us that. We've had an incredible push for basis across southern Nebraska, western Nebraska. And even further south across the Southern Plains, merchandisers are just desperate to get their hands on corn. So this tells us the yields just aren't there and aren't expected to improve as harvest rolls along.
Let's also address some of those global issues. You kind of hinted at a few of them. It seems like domestically the weather continues to be that story, but globally, what are some of the things you're watching?
Yeah, globally, number one is obviously the weather, and everyone wants to point to the currencies, but I don't think that's the issue right now, because the U.S. dollar is strong, but it's not going to stop demand for U.S. grains because countries are going to buy. The buyers are going to try to find it wherever they can. It doesn't really matter about the strength or weakness of a currency. We also have to keep a close eye, obviously, on what's going on in Ukraine as we head towards, as we make our way through fall and head towards winter. And, the China-Taiwan situation, I think it's on hold until we have a better feel for the Brazilian production. But I think it's all going to come down to the spring-summer weather in Brazil. I think that's going to be a key element here over the next 3 to 6 months.
Wheat market has had an interesting day as you and I have this conversation on Wednesday. Issues in Ukraine always kind of seems to be what we go back to over the last several months. What can you share with our viewers on that front?
Yeah, I don't have a lot of fresh information from Ukraine. The only thing that I can tell, looking at the way the Chicago market has reacted is that, the grain that's being shipped out of Ukraine right now must be low quality, possibly not even qualifying as low quality, because we've seen an incredible move, incredible jump in the Chicago wheat, the soft red winter market, despite the fact that the U.S. dollar has climbed to more than a 20-year high. So, this tells me that there's still problems. And then we throw in the idea, that Australia is going to have near record production this year. That still, Chicago market wants to go up. There's more brewing. Something tells me that a lot of it still is tied to the lack of supplies coming out of Ukraine, and the possibility there just may not be any 23 crops in the Black Sea region. That's going to keep our markets pretty active here over the next year.
Darin, another viewer, wrote in this week and noted USDA has had some challenges when it came to their data reporting. I think he was poking the bear a little bit when it comes to that. Have you followed some of these issues USDA seen as of late?
No. And there's no need to. I mean, yeah, so they broke their export sales reporting system, which came out every Thursday. So what? I mean, they had a system that was at least usable, and that was probably the only one that they had that had any relevant data. And so they broke it. That's just the way it goes. I'm not overly worried about it. The market still tells us what it tells us, and we can still read supply and demand in the future spreads and basis. Do we know the actual numbers of exports at this point? No. Does it matter? Not really.
Darin, before we let you go, final word is yours this week. What would you like to leave our viewers with?
The biggest thing is we've got to be careful with these markets. They're red hot. They've been going up. They're getting into overbought situations. Now, they could stay that way for quite some time. But what we have to watch out for is these quick moves, these quick reversals. These can happen at any time. Seasonally, both corn and soybeans still look like they're in a bullish time of year. But again, the flow of the non-commercial money is key. Fundamentally, we're going to stay bullish. So we've got to watch the flow of the investment money. If that starts to change, so could trends.